We could currently be witnessing the longest bear market in history. According to a recent study by Motley Fool, the longest bear market between 2000 and 2022 lasted around 929 days. We're currently approaching almost 300 days. A recent study by the Fed has been released stating that they do not expect to ease interest rates until late 2024, which means this bear market can continue well over 1,000 days. Let's take a look and see what that means to us as investors. DeFi IoT. I want to read to you just a study here and talk a little bit about this so we can break this down and get into the basics of this. See, a study by Motley Fool shows that this current bear market we're in, this low economy, could turn into the longest bear market in history. Most bear markets turn around in under a year. As of the closing of the bell, and here's a few weeks ago, in 2023, the S&P 500 had spent around just under 300 days in a bear market. It doesn't look close to hitting bottom either. The Fed published its summary of economic projections, and that's a report. It says that not to expect interest rate easing. In other words, we're not going to back off on raising interest rates until 2024. So if this is the case, then the S&P 500 adheres to this century's average timeline to find a bottom. Then we're talking about a bear market that could easily top more than 1,000 calendar days. It would then become the longest bear market in record. As of now, the longest bear market to have occurred between the years 2000 and 2002 lasted 929 days. Now, let's talk a little about that. Even if the Fed does back off on interest rates, does that mean that inflation will come down? And that's what's going to determine our bear market or our bull market, meaning that bear market, meaning it's bearish, it's going down, bull market, it's charging and going up, right? So you also have to understand something. You've got supply side. We don't have a lot of supplies. From the whole shutdown for 2 years, we still have not caught up, and we don't have the labor force out there we had before, because many people, once they got home, those boomers were hitting the age of, or going into the age of retirement, and they took early retirement. A lot of them did. And some people just decided to stay home and work and or become entrepreneurs because they couldn't rely on having a boss or having somebody else make decisions whether they had a job or didn't have a job. So some people took responsibilities in their own hands. Some people just said, I've had enough of this, I'm done. I'm older now, I enjoy staying home. Other people just decided, hey, I get things for free, I'm just gonna stay home, and became lazy. So what's that mean for the labor market? Well, the labor market, that means that there's not a lot of people to employ, which means that you're gonna have to pay a lot higher wages to get those people out to work, which means that everything's gonna go up. Gas is gonna go up, all the prices are gonna go up. When you raise wages, everything else rises with it. Therefore, inflation continues. And that will continue to hurt profit margins for businesses. Therefore, causing us to remain in a bear market for many more years, especially with this whole climate change agenda, like it or don't like it, it is also reducing the amount of resources we have out there today, which cuts into our supply, especially when it comes to beef and poultry and things of that nature. They're greatly trying to reduce that. The World Economic Forum wants to do away with beef by the year 2030. And this whole transition of different type of vegetable beefs or bug beefs. Now, this is something that's going to really hurt supply side, and it's going to cause inflation for those typical foods that we're used to eating during this transition period. And a lot of people just aren't going to accept that. They're not going to eat bugs or vegetable beef. So what can we do to prepare for that? Well, there is good news out there. Traditional investments such as gold, silver is a really good investment. We really like that, as we mentioned in other videos, because it's just so cheap to get right now. You can get under $30, $25, but on spot, meaning that's what it sells for on the market. Then you got to buy it from a market maker, basically a middleman, which around $28 to $30 you can buy an ounce of bullion of pure gold or pure silver. Gold is more expensive. I like the gold backs because they're cheaper to buy into. Yeah, they're a little more expensive as when you fraction out the ounce, but those are all kind of your traditional safe havens. Now another that will eventually take off, especially in the competition of a digital dollar, and most likely, and I feel strongly about this, is Bitcoin. There's other cryptos out there as well, but you gotta be very careful in those. Bitcoin, I think, is the only solid recommendation that I would ever give, though I'm not giving financial advice. This is just recommendation I give to my closest friends and so forth. I'm just sharing that information with you. So there is an area where we can put our money. If I was to get dollars and hold dollars, I wouldn't do that, and this is the reason why, because basically the consumer index that's being used today to determine what inflation is has changed over the last 20 years. They're not using the typical foods and things that we would go in the market and buy as necessities. They've replaced that basket so they can actually reflect a lower interest rate. So if they're saying we're at 6, 7, 8% interest rate, we're more than likely double, if not more than that, if we base it off of traditional measurements. And that's something you can look into yourself and see if that is a fact. So we're up there more around that 20%. So if I'm holding dollars, I'm losing 20% per annum per year holding my dollars in a safe. Now I recommend you do hold a little bit of cash for emergencies, for emergency purposes, and as well as some other things like the gold backs, those bills and so forth that we've talked about in other videos. So that's in a way you can prepare for the future going forward and kind of get an idea of what's coming and kind of prepare yourself. I do not feel inflation is going to back off anytime soon. I think we're gonna need to deal with that and learn to adjust to a higher cost of living. And these are some warnings that have actually come out from the Fed themselves. They try to get to around a 2% inflation rate, right? But they're way beyond that now at almost 7%, just under 7%, about 6.5, 6.25, and that's just recently. And so remember, that's not a true correction. They're trying to get that 2%, but they're really about 20%. So they're going to need to adjust that most likely, and we're going to probably be adjusted to about a 4 or 5% inflation rate. And so we need to learn to live with that and adjust ourselves, knowing that the dollar is in a little bit of trouble right now. But there is hope out there. Stay tuned and we'll help you through it. DeFi, IoT, subscribe, give us a thumbs up. We're here for you.